Other Venkatesh caught up with agriculture economists Ashok Gulati and Abhijit Sen and Credit Suisse strategist Neelkant Mishra on the causes and costs of this epidemic of loan waiver announcements. And she began by asking Ashok Gulati if the trigger could be the higher rural distress or just pure political opportunism.
You can say it's a mix of three things. One, the seed of this was sown when the Prime Minister himself in the UP election announced that if they are voted to power, they will waive off the farm loans in the very first cabinet meeting of UP. Now, other farmers are watching. In fact, UP farmers are not as worse off because they have a irrigation ratio cover of about 70% plus. And other states which are in a much bigger distress, I would say, those farmers are also watching. So what is so special about UP farmers that other farmers should not get? So it led to a demand in Maharashtra, and you know, now next in the queue is Punjab and Haryana very soon, and it may spread to Rajasthan or others. My feeling is it's going to be, in the next few months, if not years, going to be a contagion.
Okay.
So there is one thing, that political part of it, but there is other, which is the distress, and a trigger, just an onion price crash, can trigger a massive protest. So it's like a shout in the mountain can start an avalanche. So that type of story, because if the conditions in the rural areas are not very good because of the price collapse and despite bumper harvest, then you know, all these things get mixed into it.
Okay. Dr. Sen, is there any other trigger in terms of the crash in food prices separate from the farm loan waivers? If we looked at the way in which food prices have fallen, not only have they fallen, you know, continuously since probably last August, there has been a particularly inexplicable fall in the last 2 months. May and June, we have got negative number in CPI and in WPI. So, first of all, if you can explain why that happened.
Well, it's in part a good monsoon. Production levels went up from a base which was very low because of 2 bad droughts in the 2 previous years. And you had a situation in which obviously both the consumer demand and much more importantly, the ability of the market to actually function in a normal manner was considerably weakened by demonetization. And don't forget that almost all agricultural markets are cash markets, and any shortage of cash would show up in lower prices. So I'm not particularly surprised by the fact that that's the way the market has reacted, given the good monsoon and given the background of demonetization. And farmers have a huge amount of legitimacy in saying something must be done. We've had 2 bad years of monsoon. Something has to be done about these very bad prices in a good monsoon. So we are actually no better off with the monsoon being better. But as Ashok is absolutely correct, the real trigger for this is Mr. Modi's announcement in the UP election that we're going to give a loan write-off here.
Okay.
It need not have taken the demand of farmers, need not have taken the form of loan waivers. It's taken the form of loan waivers because you said we'll do it. And if we do it in one place, we've got to do it in many.
Neelkant, what is your analysis of the fall in food prices? 1, the causes, and 2, do you see it as something that can continue?
I think it can continue. I think the warning signals were available even during the years of drought. If you recall, food prices had not risen very sharply despite 2 consecutive years of drought. In fact, the decline in CPI, inflation and food inflation had started well during the phase of the drought. So despite volumes being low, we were not seeing prices go up so much. And That is why I think it should have been anticipated. I had started flagging this in May last year that there is something structural which has changed. We are seeing food demand, at least, and so people say it's only about cereals, but cereals are like 51% of our gross cropped area. So if people shift even 2-3% out of that to say anything else, you're talking about big oversupply emerging everywhere. And therefore, and things like, milk, I don't think there is any, MSP or any such cycle. So I think the decline is very much structural. We have for a long time, through policy, sustained too many people in agriculture. The first time someone flagged it was 1880, that India's man-to-land ratios are 10 times that of Britain. Even now, we have 100 times as many people in agriculture as the Americans have. Our food demand, because population growth is now less than 1% a year, per capita calorie demand does not grow that fast, actually doesn't grow at all. And therefore, aggregate food demand is not, you can talk about pulses and oilseeds, and there are pockets where we need to do a lot more and provide cheaper calories. But otherwise, we don't need much food. And therefore, unless government pushes a lot more capital, unproductive capital into that side of the economy, which was the practice for the last 70 years, you will not see food prices go up, and therefore there will be farm distress.
CNBC TV 18 decodes the political economy of farm loan waivers with Ashok Gulati, Abhijit Sen and Neelkant Mishra. Catch our special coverage at 7 this evening.